And now for something completely different. Hello everybody and welcome to today's video. My name's David Hanna, Chairman of Cornerstone Group, and today's video is all about the 10 top stamp duty reliefs. Some of these you'll already be aware of and others you may never have heard of, so stay with me. The video is intended to be a quick run through these and the basic operation of how they work, and if you need more information you can find links to our website below and our email address. And if you like this video, please click like and subscribe to receive updates and more video content from us. So let's begin. The top 10 stamp duty reliefs. Well, first up and most topical is multiple dwellings relief, sometimes called annex relief. And I'm going to cover this as if it were two reliefs because there's one that applies to homeowners and one that applies to investors and indeed developers. So, multiple dwellings relief for homeowners. Houses with annexes or cottages in the grounds. Now, a lot of us live in extended families and we have what's called an extended family home, both metaphorically and literally. And as a result of which we buy houses that have separate accommodation for our dependent relatives. And because that's two dwellings, you can get multiple dwellings relief on it. You might recall that when the 3% surcharge was introduced in 2016, the government had to give a special exemption to annexes and at the same time confirmed they were eligible for multiple dwellings relief. So how does that work? Well, on a £500,000 house, no annex, you'd pay £15,000. But on a house with an annex, you'd only pay £5,000. So that's a valuable relief to have, and just by way of note, the Revenue have been doing a consultation on this. They call this an unfair advantage, and will probably be changing this sometime later in 2022 or early 2023. The second relief, multiple dwellings relief for developers, by the way it's the same relief but it applies in a different context, was actually introduced originally in 2011 to correct a disadvantage that multiple property purchasers encountered if buying multiple properties. Because in those days, and as indeed today, if you buy anything in a single bargain or a series of bargains, you have to add everything together and keep calculating tax at a higher rate. And what this meant was that when buying multiple apartments, or indeed multiple small houses, people ended up paying a higher rate of tax on those houses than they would have done if they bought them individually. So the government introduced this relief, multiple dwellings relief, to correct it, and we've rolled forward since 2011. And if you're an investor or a developer acquiring part-built or completed units, then you need to be aware of this relief because it can get the marginal rate of SDLT down as low as 1%. And that's important. And that could have a significant impact on your deal. If you're a corporate acquirer or a larger acquirer, you may have to calculate your SDLT 3 or 4 different ways in order to decide which is the best outcome. And you might want to seek specialist advice. Coming in at number 3 and mainly aimed at what I call the trade or the developers, flippers, as we sometimes know them, those people who buy land with the intention of flipping it on to somebody else at a profit. And the big one in that, of course, is what's known as subsale relief. And again, if you are in the middle of a simultaneous completion chain, you shouldn't pay SDLT because you can claim subsale relief. And if you only subsell part, you can claim the relief on the part. There's a lot of anti-avoidance provisions surrounding it, and you need to be a little bit careful to make sure that you meet those conditions. But generally, that's pretty popular in the land dealers and the land traders. The next 4 reliefs are actually described quite disingenuously as additional reliefs for residential property, and they mainly apply to developers and what are known as property traders. Now, property traders is a defined term. It means a company established for that purpose. So just because you decide to trade a property, it doesn't necessarily give you an eligibility for this relief. In fact, you have to become a limited company to do so. So what are those 4 reliefs? Well, all of them provide 100% exemption from SDLT if you are buying from the representatives of a deceased estate where they've lived in that property, if you are stepping in to restore a broken chain, sometimes called chain break relief, if you are buying a part exchange property from somebody buying a new home from a house builder. And here you could either be the house builder or you could be a property trader. You just have to satisfy yourself that your seller is qualifying. And the last one, which is available to property traders and indeed employers, is relocation of employment. Now let me dial back a little bit. The important thing here is it's 100% relief from SDLT. You don't pay any. More importantly, it depends on the circumstances of the seller, not the purchaser necessarily, albeit it has to be a qualifying purchaser. So doing your due diligence on your seller and their circumstances is important. And it's quite valuable. If you are picking up a property that is, shall we say, from a decedent's estate, which you're planning to trade on after giving it a lick of paint, this can save you all of the SDLT, which these days, with a maximum rate of 12% plus 3% surcharge, is worth having. And in the light of the pandemic, we've done quite a number of these. So I guess that leads me to round out what I describe as the minor reliefs. There are actually 49 reliefs from SDLT, but the most popular ones we see, or one of the most popular ones we see, actually isn't a relief at all. It's actually an anti-avoidance provision. And that's the one that deals with transfers to or from partnerships to connected persons. Now, I'm not going to get too detailed with you, but basically, where a partnership acquires or is transferred property from a connected person, or transfers or sells property to a connected person, then provided all the connected person is connected to all the partners, then no SDLT is due. It's not a claim, it's a calculation. What can be connected persons? Well, companies, other partnerships, members of the family of the partners, pensions, trusts, anything that fulfills the definition of connection under section 1122 of the Corporation Taxes Act. And it's amazing how frequently we find this provision applies but has been ignored or isn't even known about by the conveyancers. Indeed, we've just uncovered a problem with UK pensions and partnerships, and whilst we have no accurate estimate, we estimate that the losses to pension funds could be anywhere from 5 to 15 billion pounds over the last 15 years. What I would suggest is, if you have a pension or a trust or a company that has paid stamp duty on a connected party transaction, that you get it checked immediately. Now, for the numerically adroit, you'll realise I'm only up to about number 8. Number 9 and number 10 in terms of popularity, believe it or not, are charities relief and housing association relief. We're seeing a lot of work in the assisted living sector with attempts to grow socially affordable housing, and many of the private entities that are doing this are in fact charities or holding on trust for charities, and they are 100% exempt from SDLT on their acquisitions. Similarly, registered housing associations are also exempt, and it's important, if you are one of those associations, that you check your eligibility, because claiming that is going to significantly cut the cost of your investment and improve your ability to spend more capital on buying more affordable housing to help solve the UK's housing crisis. Now, as I said at the start of this video, quick canter through. Sorry it's a bit light on detail. If you'd like this video or you'd like to know more, please click like and subscribe. There's a link to our website and several of our blogs in the description below. I've been David Hannah for Cornerstone Group. Thank you for listening.